All right, good morning. Yo, yo, yo. Let's get on with it. Hey, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. Nice to meet you. Commodities, how are you? Happy Friday. You made it. It's a topsy-turvy world out there, isn't it? 2 o'clock in the morning, it was 50 degrees outside my house. By 8 o'clock in the morning, or by 6 o'clock in the morning, it was 25. It went from 50 down to 25. And 50 was warm. Shouldn't be 50. But anyways, weird world out there. We got central banks raising rates, yet economies are contracting. Dogs are living with cats. Republicans are growing ponytails. Crazy. So anywho, hey, what do you want to do today? Why don't you let me know in the chat what currency pairs or commodities you want me to cover, and we'll do that. In the description below, there are 3 links I'd like you to check out. First one is my book, Strategic and Tactical Forex Trading. Would you please leave a review on YouTube? Or did I say YouTube? Sorry, Amazon. See, I can't think and talk at the same time. Yes, on Amazon.com, please leave a review for my book. It'll help set the deck up properly for the release of my next book, coming soon. Next thing I'd like you to do is join FX Bootcamp so I could really roll up my sleeves and work with you and help you improve. Not just me, but an army of foreign exchange traders that will work with you. Like-minded people, okay, doing the right things. So join FX Bootcamp. It's $88 a year. And then lastly, I'd like you to click on a link and visit tradersway.com. I recommend them to you. I believe them to be a responsible business, an ethical business, a business model that's in your best interest. They don't trade against you. It's straight through processing. It's an ECN. All of this benefits you. I think you should check them out. I think you need to have good service providers as a small business, and that's what your Forex trading is a small business. So you rely on good support and service providers. Traders Way is good for you. I recommend them. Open an account. tradersway.com. Let me check my phone, by the way. My phone's been beeping like crazy. I want to make sure everything's cool. No. I got it. So, anywho, good to see you. All right, so in the chat, please type in what you would like me to cover today. What currency pair, what commodity? Bitcoin has volatility in the last few minutes. Maybe you want to look at the stock market. Maybe you want to look at exotics. Let me know what you want me to cover. USD yen, pound Aussie. Thank you, AR. Will I do an annual outlook? Yes, sometime in early January. S&P 500, Euro dollar, Swiss, Euro dollar. Anything else? Is that it? Harvey's like, hey, PCE. Yep, 5.5. Again, we're not really interested in that right now. All that matters is what the Fed's going to do. So, but we have to put that in our table, that's for sure. Euro dollar, gold, Dow, USD yen. Good morning, Maida. Hong Kong. Okay. USD CAD. Pound dollar. Can I do the course next, my next course on real estate? Maybe. I think I'm going to do it on hedge funds, though, Thiago. And I think I'm going to do a hedge fund cruise in the first half of the year. Kiwi yen. Thank you, Kevin. Yeah. Oh, Euro Swissy. All right. Pretty rangy. Yeah. All right, cool. Well, that's a decent start. Let's start with dollar pairs then. We'll just go left to right, get most of what you requested. Let's do this on an hourly chart. All right, cool. So, all right, I'm short here off of a central pivot point. Question is, what's going to happen next? Okay. Well, if you're trading it as a trend, see, the day trade is there to there. You can even see I have conservative profit target. So it's pretty close. But if you're reading into this in a trend, and you'd have to do it pulled back a little more, you can see there isn't actually a trend. I wouldn't call that a trend. And you can call this kind of a top-ish. So it's really rangy, but if you're going to trade it like a downtrend, then you're going to kind of look at this. Whoop. Don't you stink? So what you're thinking for today is down, right? Lower high, lower low. So this could be an add-on. And that would show either Aussie dollar weakness or more likely US dollar strength. Okay. Yeah. The setup, Jim's talking about WTI. The setup on the roll reversal yesterday was awesome. And I believe Darko grabbed that trade. Pretty straightforward, right? Will we be here for consumer sentiment in 45 minutes? I don't give a damn about consumer sentiment. It's the least, I don't even think it's even news. Kevin. New home sales. Okay, well, we already know the trend, so it's not likely to be much different, right? High interest rates make it very difficult for home sales, right? Why? Nobody cares about opinions. Rajneel? Sentiment is opinions. So very often, people have opinions about one thing and then do something quite different. So I don't care about opinions. Really don't. You know, for example, for 10 years, people told us how scared they were of the stock market. and how it's going to crash at any moment. And it went up for 10 years. Why? People kept buying it. They were afraid. I heard surveys are a leading indicator. No, they're garbage. Okay? People say one thing and do something else. I only care about what people do. Okay? I know I'm being quite frank, but it's important to, right? Anyways. So this is where we are in the bigger scale of things. And that's why you could say, well, maybe this is bearish. Okay? Go all the way out to maybe a daily. And you can see now we're caught between the 21 and the 55. And it feels like it's rolling over, doesn't it? Okay. So just one last comment on, I heard surveys are leading indicators. Let me tell you what's better. Let me just bring up one example. So you're saying sentiment surveys are a leading indicator. Okay. Let's go out to July of next year. Here's people's sentiment about where interest rates will be. Okay? Two things about this survey. One, it's smart money doing calculations based on math, not emotion. And second of all, they translate their sentiment in real money to the tune of billions. Tens of billions, hundreds of billions. So it's not pure, it is opinion based on their research, and they have entire departments, PhDs and quants and economists doing their best job to figure out what the interest rate will be July of next year, and then negotiating billions and billions and billions of dollars on it. Or you stand in a shopping mall and you ask some dude how they feel about the economy. Which one is more important to our trading? This one. Okay? This one. This one right here. This is the one I care about. Asking some dude at a shopping mall in a suburb of Detroit how he feels about the economy. I'd rather say, he says, well, I'm afraid the economy's bad. But he's standing there with a $6 mochaccino. And I'm like, the mochaccino says it all. Yeah, you're afraid. Sucking down his $7 coffee. Mocha Frappuccino with 10 inches of whipped cream on top. Doused in caramel and chocolate. He also feels like he needs to lose weight. He's trying really hard. Every time he goes to McDonald's, he drinks a Diet Coke. Great, good. Okay, so I don't care. Okay? I don't care. I follow the money, not the emotion. Cool? All right, so that's that. And you can see I have a target already at 65 and a half, 65 and a quarter. And I'm short at 67 and a half. Right? Maybe 200. What am I going for here? We can 220, 222. 222 pips. Cool. We'll see. So where am I short here? What number is that? Can't quite see the number, 67.5, I guess. And we're at 66.80. So I've had as much as 100 pips profit on this from yesterday. My profit seems so far away. Now I know it's here to stay. All right, USD kitty CAD going nowhere fast. Going nowhere fast. Longer term, you would expect US dollar strength and then probably this coming up. But the dollar strong, US dollar strong, US dollar's weak, CAD's weak, but then oil goes up and then all over the place. Yeah, so it's difficult. What are the odds it goes up? Pretty high, pretty high. But with this technical analysis, it's kind of 50-50 in the medium run, meaning this is not a trend. Well, the trend is sideways. And so if you were going to filter through this and say sideways but up at some point, then yeah, down here was an okay. But remember, if you're moving sideways, there's no market. So you kill your 21.55 and you try to use your 5.8. But even then, I think it would have been a frustrating trade. So probably something, there's got to be something better than that. Okay. Rajneel says, does QuantBox score consumer sentiment? Not sentiment directly, but positioning. Okay? So what you do is you look at your commitment of traders report, COT, and you look at total positions, okay, minus hedgers, okay, minus institutional trades, which are speculators, institutional, okay? So this is hedging money in the market, institutional money that are trying to make money through speculation. And guess what? There's still a number of trades. If you take the total, subtract the hedgers, let me put this differently. They're institutional, but they're institutional hedgers or institutional speculators. Okay? There's still open positions unaccounted for. What is that? Retail is the leftover. Okay, the contracts are in the market, but they're not large enough to be a reportable speculator, so they're not a hedge fund. They're not in the market for hedging, so they're not like a bank. So who's trading these orders? Non-reportable speculators. That's retail. That's money in the market, not an opinion. And that's what QuantBox tracks. Not opinions. Don't give a damn about opinions because people say one thing and do another. Okay? They get, right, a 44-ounce Diet Coke at McDonald's because they're worried about their weight. They say one thing and do something else. They're worried about the economy, but they spend money like there's nobody's business, right? They're worried about the economy, but they're jacking up their credit cards. They're worried about the economy, right? But blah, 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 blah. So should I invest based on their worries or should I invest based on their behavior? So that's what QuantBox looks at, not their opinions, not their emotions, but the positioning of their money in the market. You see? What do you think, Rajneel? That's good, right? Sentiment through their actions. Sentiment through their investing actions. Another way that I like to do it is, I care less about their sentiment and more about, like, how about retail sales, for example. Okay. So they might be worried, but then they spend money. So, great. The interesting thing is if you track like behavioral finance, because they're worried, they behave differently, and you want to track how they behave. So they might substitute, and instead of buying steak, they buy chicken, but they're still spending. Right? Yes, the $7 coffee. But again, Kevin, right? They're afraid about the future. They're worried about their job. They're worried about inflation. They're worried about the economy. And then they're standing there with a $7 coffee. I mean, it's a profound thing, isn't it? You're like, well, are you cutting back? Yeah, I think that's a good idea. We should probably start cutting back. Yeah, and they're just standing with their $7 drink. So, whatever, dude. Okay. So I talked to everybody. I was in Atlanta hanging out with fashion designers the other day with my daughter. That's what dads do. And I talked to everybody. Okay? This is the ultimate retail. There's no name. I'm not talking to Gap employees or Walmart employees. These are people that make the clothes and sell the clothes to their customers directly. And basically, it was like an art gallery, but with a whole bunch of fashion designers, right? And they say things are horrible this year. Horrible. Horrible. If they don't sell clothes, they don't eat. And in fact, instead of food, they have clothes that no one wants to buy. That's called inventory. And that inventory might be built on credit. Either they borrowed the money from a bank, or they put the money on a credit card, or they have investors, or more likely a combination of all of those things. And they got to pay rent. And this year is horrible. What do you think of that? Much more factual based. And that's the type of research I like to do. I was talking about it last night when I was at a cigar bar. I asked people what they do, and I listened to how business is, but I ask them, so how's business? I look at their shoes. What kind of shoes are they wearing? Are they buying $100 shoes, $1,000 shoes, or $20 shoes, right? Like everything matters. Okay? But how's business versus how do you feel about the economy are two different things, right? So I'll ask everybody, everybody, but not opinions. Don't care about opinions. Huh? Horrible. Pound dollar, there's the trade I missed. But look what's going. Lots of great follow-on, right? Look at all these follow-ons. I think last night in the swing trading group, I did this as the plan. Plan A, I think was, and plan B. Is that right, guys? I think so. So plan A is stickety-boo. And hey, by the way, in case you go on holidays and all that kind of stuff, and I don't see you for a while, thank you for being part of the community all year. I think Forex.Today is good. I think this community adds value to society and to the world at large. So thank you for being part of it. Thank you for your positive energy. Thank you for your focus and your professionalism. I appreciate it. I think we do good. And I thank you for that. Yeah, I appreciate you. I'm going to cancel this. I just don't want this sitting around. Euro dollar. People asked about euro dollar. And it too is going nowhere fast. But I do have to the left, which you can't see because I'm zoomed in on a 15-minute chart. This was going up. It was very bullish. And based on seasonality, I'm... for weeks now, I've been eyeballing it to the downside. I think 1 week ago, I set this up to say, look for a change in direction. Okay. And we might slowly be getting that because we did have this giant move. Here's a top. This zone here might prove to be the lower high resistance. And even today, this could be the lower high resistance, which produces the lower low, which really does give you game on. And you may have forgotten, but you see this line here I drew 3 weeks ago. It projects thousands of pips down. Yeah. So we're still here. Okay. So it hasn't gone anywhere for a while, but the other way of looking at it is, well, it may have not gone anywhere, but it's stopped going up. And that's potential news. 1,800 pips, Thiago says, yeah, that sounds about right. Cool. Let's zip over and do... What do we do? What do we want to do? Let's do exotics. Okay. Look at here. So I'm short the USD South African Rand. What? Yeah, anywho, okay, we're short somewhere, probably on a higher time frame. All right, and so here we have what? Consolidation and the potential to break lower than low. Okay. So that's the pattern I see right now. And we have just tickled a new lower low. And you can see I'm short at a kind of a weird crossing. Okay. Weird crossing. But I've already removed risk, so I can't lose money. What do you stink? I'm wondering if Japanese investors would like to earn the yield here. We'll see. If we go further out, look at a 4 hour. Now you see kind of maybe what I'm looking for here, where this could be a down, 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 up, up, sell, down, 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 up, sell, down, 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 down. A little bit of a Hail Mary. What do you think? And this is a daily chart now. I might catch it, huh? I might, probably not, but I might catch it. We're at 17 psych level now. Okay, on our way down to what? From 17 to 15? 17 to 16? Yeah, that's right, Darko. I got your email. Yeah. So I can't lose money on this, so that's a freebie. That's a bonus. So I'm just wondering if we're on our way down to 16. What do you think? Any thoughts on that one? Snuck that one in on you guys, huh? You're like, what? All right. With that being said, here's my USD Mexican peso. And I'm once again up a couple of hundred pips. Actually, I'm up, well, total I'm up almost 500 pips. But on this trade, 250 pips plus $58 in swap. What does that mean? Well, I've now been in the trade for 2 months. You can see October 25th to November 25th. Okay, so that's 1 month to December 25th, which is this weekend. So that's 2 months. I have $100 of my cash invested into this trade, and I've earned $58 in interest. So in 2 months, I have an internal rate of return of 58% just on the collection of dividend payments, if you want to look at it that. So there's two things going on when you look at a carry trade and you measure what you're doing. Okay, this is income. Think of it like a bond. Okay, and this is asset appreciation. Like an apartment building, for example. The apartment building might provide you more rent than expenses. So at the end of the month, you get a positive cash flow. Plus, over time, the value of the apartment building goes up in value. That's what's going up here. So this one, I have a 58% return in 2 months. Hey, not bad. And this one, right, is a 250%. Okay, what do you think? Anybody like that? Nice, yeah. Over here is my Rand trade from yesterday. I could cash out now for an 88% internal rate of return. It's been a long black day. It's been a long black day. And then, of course, this Aussie dollar trade I've been in for a few days, right? 2 days. Only a 75% internal rate of return. So that's all right. Booyah! Hell yeah! Okay. So, everything's golden girls. Cool. So that's exotics. We can take a look at the commodities. We were talking about my WTI, about a good trade that Darko got. I think Jim said he missed it. But nonetheless, whatever. Hey, trading's difficult. There's no doubt about it. What I was saying is there was a good role reversal, right? There you go. From yesterday. Okay. And now we're right back to where we were. Target probably higher. Target probably higher. Oops. Okay. Cool. Okay. Got some good love going here. Climbing Jacob's ladder here. Look at that, huh? Crikey, she's a beaut. Yeah. Riding the 21 EMA. Wayne, will Santa pump up the SPX? How would I know? How would I know? Okay. I know fundamental analysis of macroeconomic data, and I know technical analysis. But do I know if this Santa pump up the SPX? How would I know that? Now, I think we've had more than enough. I think it's already happened. People are like, are we going to get a Santa Claus rally? Well, what the hell do you think happened from October to the second week of December? By the way, I did say a couple of weeks before the elections in the United States, all the way to about the second week of December, I expect the stock market to go up. And then from there, between the second week of December and the second week of January, in particular, first week of January, I think the stock market will come down. But like a Santa Claus rally on the 23rd of December, that doesn't even make sense. Okay? So you need to, depending on your definition. And by the way, I worry that you listen to some kid on YouTube who is now a guru. They brag about having 3 or 4 years of experience, and they might be talking nonsense like a Santa Claus rally. Dude, this is the Santa Claus rally. Okay? So I worry that there's more and more misinformation or disinformation out there where apparently you could trade for 1,000 days. For 1,000 days. Right? And now you're an expert and everybody listens to you and follows you. And I'm like you don't need any credentials anymore. You don't need to be licensed and registered. You don't have to pass tests. You don't have to have fancy degrees that take you years and years and years and years and years and years and years to earn. You can just live stream on YouTube and be an expert. It's weird. To me, it's really weird. Okay? But I know Wall Street's not popular, but if I had to pay somebody to manage my money for me, I'd want some asshole at Goldman Sachs with an Ivy League degree. That's licensed and registered. And has compliance up his yin-yang all day. Versus some kid on YouTube, right? Wowzer, huh? What a strange world we live in, huh? I told you that we could fly, 'cause we all got wings. But some of us don't know why. I heard an NXS song the other day and I'm like, oh, damn, snap, turn it up. I don't know if you know that song, but it's just funny. An old NXS song. Wow. I'm like, oh, wow. Oh, is that right? All you need is 3 chords in the truth. All right. So yeah, we're at the stock market. Okay. Is there going to be a Santa Claus rally besides the giant one we've already had? I guess the question is, do I expect that? No, I do not. Why? That's the thing. 90% of people would probably say, well, I think or I think that. I'm like, why? And they can't answer it. Okay. Why would S&P 500 go up? And if you say Santa Claus rally, you don't know what you're talking about. Like, you just don't even understand the concept, but maybe somebody else told you that concept, but they don't understand the concept. I predicted this stock market rally in January and explained why. Okay. Then I explained this downward move in January and I explained why. And almost every year at this time, I'm exiting. I drew this line to say, well, that's the projected top, and I explained why. Okay? I explained somewhere in here, and I think more like here. And by the way, call bullshit if I'm not telling the truth. But in here, I explained that I actually was taking profit on some of my stocks in my retirement account and going to cash. Meanwhile, I'm triple leveraged short. Okay. Well, rebalancing is going to happen, Kev, more like in here you're going to have rebalancing. Okay. So it's just like you need to tune out of the wives' tales, the half-truths, and the 2-bit gurus. I think the biggest risk, because I don't know what everybody else does, honestly. But I worry what you do before and after you hang with me. It could now become dangerous because I did get thrown an ad the other day, which is rare on YouTube, but I did get an ad so I was logged into the wrong YouTube account. And the kid was bragging that he had over, 3 years or 5 years of experience. And wow. And they're an expert now, right? People are following them. That's very, very dangerous. That's very dangerous. So I worry about you. Okay, I worry about you, where you get your information. If I have worries about the experts on TV that are managing $1 billion and I don't think they have a strong sense of what's going on, how about the kid on YouTube? Huh? Be careful. Okay. Okay. How many years of experience do you recommend one should have before becoming an expert? How about 5 years of success? So whenever success starts, I'd say 5 years. Because you have to show that your success isn't related to current market conditions and you're essentially getting lucky. That the market conditions need to change and that you're smart enough to be able to adapt and be successful in different types of market conditions. Jim says 10,000, but Jim, I'm not arguing against that concept because I know the concept, but I know people that have golfed for 10,000 hours and still suck at golfing. So 10,000 hours of what, I suppose, right? $10,000 of what? But 10,000 of what? And then there has to be some proving ground, right? Right? Some proving ground. So I think that's where, my education is helpful. It gets me into the short stack, right? But what do these degrees behind me say? A, I passed some sort of competition to get in. 99% of people were rejected. For some stupid way, some stupid reason, I was in the 1% that got into whatever one of these programs was, right? All right, so there's a filtering, there's a competition, and it says something to somebody that doesn't know me. They're like, I don't know this guy, but he got into a prestigious program that 99% of people were rejected. Great, so I got into the program. There's the first step. Okay, how hard was the program? Oh, well, it was thousands of hours. Okay, great. Under all kinds of subjects. Great. Took even thousands of hours or more to do the homework and the research and the paper. Great. So all of a sudden, maybe there's 10,000 hours there. Great. And at the end of that whole thing, there's an examination, right? For obviously every class, but let's just say, at the end of this proving ground, that piece of paper, before I get the piece of paper, there's a test. Okay? And my average on, over the 5 years was 93. An A minus. Actually, lower than that. 91, we'll say. 91. After 10,000 hours of study in a program that is now canceled because it was too difficult, I scored a 91%. Okay, good. So what does that mean? Well, it means something, doesn't it? Let's say it means even very little to you. You're like, whatever. But it means something. There's some sort of credential for me to talk about this subject matter, macroeconomics. How many YouTubers would we have talking about macroeconomics if YouTube required you to show a graduate degree in the subject matter that you're talking about? How many YouTubers would we have if you were required to show a graduate degree in your subject matter? Very few, probably. No, not one. I doubt one, but significantly less. And so, does that make me an expert? Well, probably makes me more of an expert than the 17-year-old. And then you could probably go through a whole bunch of other things too. The fact that I'm not 17. Right? Right? If I name drop him like, well, I sat on the board of directors with George Soros, the 17-year-old would say, well, who's George Soros? Oh, well, he broke the Bank of England. What's the Bank of England? You know, but whatever. So I'm not saying it's, going back to what I was trying to clarify is I worry about you, and I hope you get the right information and learn how to interpret properly to make sound investment decisions. Okay, anywho. All right, so here we go. This is the S&P 500, and I say, why the heck would it go up? Well, first of all, what was the truth that I gave you? This is to be expected. This is the expected projected high, which you knew before we got there, by the way. And then what we expect from after that touch, I drew it this way, okay? Because remember, I drew this line as the potential top when we were like way back here, I think. Then we got there, and then what we're talking about is down, 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 down. And we hit the line, we get rejected. Then I'm like, I'm going to cash on some of my investments. I'm triple leveraging short, okay? And now what? I have these projections that say this. So am I thinking about a Santa Claus rally next week? No. And even if it did, it wouldn't change even a sliver of anything, because I'm looking at macroeconomic data, right? I'm looking at microeconomic data. I'm looking at seasonality. I'm doing the math, right? Where I do the expected return of a stock is equal to the risk-free rate of return plus the beta. Okay, I guess I should do it this way. I'll delete that. The expected return of the market minus the risk-free rate of return. So when I say, look, that's basic math, I've done the calculations, and this is going to fall. And I bet you the 17-year-old doesn't know that. So they have opinions, and they have conjectures and speculation, and they read things in somebody's book, or they heard somebody say something, so they regurgitate it, not even having the experience. And I'm like, well, if you just do the math, okay, the present value of a stock is equal to the future cash flows over 1 plus I to the n. Okay? If you can't do that math, and that's basic math, that's basic finance. This is what we're talking about now. So, right, my graduate degree is actually in finance, not economics. My bachelor's degree is macroeconomics. My finance degree is graduate level. This is finance. What's finance for? Not talking about the economy, but telling you what the S&P 500 is going to do. Or if you give me a particular stock, I can analyze the financials and tell you what it's worth. If you're like, Wayne, what's my apartment building worth? I can tell you to a fraction of a penny. It's just math. To a fraction of a penny. So again, Santa Claus rally, whatever, bro. Okay? Whatever, bro. These two things just say down. Now, if we do get some rally next week, I'm not going to call it a Santa Claus rally, but it's probably enough proof for somebody. But my strategy would be, even if this goes up next week, okay, what am I going to do? I'm going to look to sell. Why? Because I've done the math. And that's what the math says. Now, things can change, and I would have to adjust my models. But I don't think silly things like the Santa Claus rally next week. I've already taken profit on my Santa Claus rally. And I did so in here. Right? Right? Now, Byrne says that doesn't matter if all you do is day trade and scalping. No, I think it does. I think it does, Byrne. I think if you're going to be a day trader, intraday trader, or scalper, having good models for predicting when to be bullish and when to be bearish, and understanding why these market conditions happen and change, and knowing when they happen and change, would make you a much better day trader, intraday trader, even scalper. I honestly believe that. Okay? Otherwise, what you're trading is purely the past. And that's what technical analysis is, right? Most of it is looking at past patterns. But I'll tell you, your past pattern didn't tell you up here. But I told you in January. Okay? I said a couple of weeks before the election. The election is here. So week number 1, week number 2. There's a couple of weeks before the election. I said around, right? Let's say a couple of weeks before the election, the stock market will rally, and then it will definitely rally after the election. Until probably, after the Fed meeting and all that. So, like the second week of December. Okay? Look! 10 months in advance. Now, let me ask you, Bernd, if you were a scalper, does that help? Hell yeah, it helps, because now you're scalping in the right direction. You don't, okay? If you don't like my sort of position building strategies, my portfolio construction strategies, and you want to stay price action scalping intraday only, I'm okay with that. I think there are better models, but I'm not here to tell you what to do. But I do want you to do it to the greatest efficiency and effect as possible. And if you can't see that, like you don't understand this whole process that I outlined in January of last year, then you don't understand the market. So in the long run, you're going to leave a lot of money on the table. So to me, it makes no sense if you're like, Wayne, I don't need to know all that because I'm just a scalper. I think that's just dumb. I think that's just the wrong attitude. I don't need to know that. I don't want to know all that. All I do is the price action. Really? You don't want to know. You don't want to learn. You don't want to grow. You don't want to... I mean, I don't even understand the attitude. Really? You don't love Forex? You're gonna find a way to do it with less work? That's so foolish. I've never heard of anything so silly. I want to be a successful Forex trader, but I don't want to do the work and I don't want the knowledge. It's just foolish. Right? And I'm burned, and I'm not saying that to you. I know you're not that way, but I'm just saying, like, you don't want to know everything? Okay? Okay? Kindly speak on the future of what will end the projection in the next 3 months. Okay. Family time, next 3 months. Let's say pound dollar down. How about that? Brent says, I'm just saying you don't need to have a Harvard degree in macroeconomics to be a good and profitable trader. Totally agree with you. Okay? Totally agree with you. I wasn't saying that was required. What I was saying is there's experts on YouTube that are probably not experts. They're not required to do anything to speak about their subject matter. They don't need experience. They don't need a license. They don't need a degree. And I think that's terribly dangerous. That was my point. And when they say they think the stock market's going to go up or the stock market's going to go down, and I say, why? Can you do the math? Like, let's just go through the math. Show me why you think this. And then you find out it's an opinion. It's a guess. It's like an epiphany. They're like, oh my God, I heard someone talk about a Santa Claus rally on CNBC. And so I think it's going to go up next week because of the Santa Claus rally thing. And they don't even have a clear concept of what that is and what the person meant. They don't understand it's already completed, that we've already had it. They don't understand the seasonality of the market. They don't understand the finance calculations of the asset, the asset pricing models. They don't understand why prices go up or go down. The link in the numbers, what's going on with the Fed changes the valuations. Like it's just conjecture at best and bullshit opinion at worst. And like, it's empty. That's what I'm saying. You got to be careful. You open the box between their ears and it's just empty. Right? That's what I'd be careful about. What? Right? But like why I was looking forward to the Santa Claus rally was because the put call ratio was really high. Okay. Okay, that's fine. That's funny, Kevin. Yeah. It was so easy. Everybody's trying to please me, baby. Yeah. Anyways. So, yeah. Anywho, yeah. We can take a look at some yens. Sure. Thank you, Jim. 640. Cool. What's the 30-year mortgage now? Let me Google that. 30 mortgage rates. It's all right. Dang into the night. See me hit you, you fall down. Wow. Nothing but ads if you type in 30-year mortgage rates, huh? Still, wow. People are, wow. No shot. Oh, my God. Oh, my God. Look at that. Oh, my God. Mortgages have more than doubled. So about, what was it, 18 months ago? 2 years ago? I explained to all FX boot campers why they should borrow as much money as possible and get money the cheapest it's ever been in a lifetime and will ever be in a lifetime. Holy smokes. So if you didn't lock up cheap money, dude, you missed out. You just totally missed out. Remember, I gave you an example. BMW. How much was the stupid thing? 35K? 40K? 40K. Let's just say it was 40K. Okay. BMW gave me 40K. And at that time, most places were free, but I remember it was higher than that. I think it was 1.2%. Maybe even 2.2. No, I'm going to say 1.2. And so I was faced with a choice. Do I pay cash? Or do I borrow? Okay. Pre-COVID, obviously. We had quantitative easing in the market. Stock market's going up 20% a year. What should Wayne do? No, XX, he says too much information is actually negative. What trading what you think rather than what you see. Well, I've never recommended that either. Okay? But I do believe you need to understand how, why, and when the market moves. And the rest is technical analysis. But what you're saying, XX, and I do agree with you, XX, if you think the market should be falling, but it's rising, you don't sell. What kind of idiot sells a rally? Not me, and I've never once recommended it. But if I thought the market was going to fall in the future, then I can be short-term long, but long-term short. And when eventually the technicals confirm my fundamentals, now I'm long-term short and I'm going to let my winners run. But I've never once in 20 years of doing this said sell a rising market or buy a falling market. Never once. Okay. So anyways, okay, I took the cheap money. Why? Because I could leave my cash in the stock market growing at 20% a year. So I'm going to clear 18, 19% on my car. My car is going to make me money. Okay? You got to understand, right? I'm going to make $8,000. And what's the payment on this thing? I don't even know these things. $5,000 a year? $400 a month? Okay? Let's just do it this way. Let's say when you add up all the expenses, okay? Okay, my cash makes $8,000, and this should be here. And right? And let's say my monthly payments add up to $8,000 a year. How much did, right now when you're talking about net worth sort of thing, how much did the BMW cost? Yeah. And I could even argue that I probably made money on the deal, but let's just go with that. Okay. So I think it's now been paid for very nearly. Okay. I think it's nearly paid for. How much can I sell it for? 20,000? I bet you I can get 25,000 for that vehicle. It was 40 back in 2018. 2018. I bet you I can get 25 for it, right? Do you guys agree with that? BMW X1 with every M upgrade, $5,000 seat upgrade. It's got giant wheels on it for its size. It's got the entire moonroof, you know. It's got every upgrade. M grille, M trim, M body package, M wheels, M steering wheel, M seats. By the way, M's are all upgrades if you don't know what those are. Okay? So, if I got the asset for free, you see where I'm going? If I got the asset for free because I invested the money instead of spending the money. Now I'll lose the BMW, but I got to use it for what has it been, 5-6 years? Okay. And now, do you understand? I have $25,000 in cash. Have you ever thought about it like that? I think self-made wealthy people do think this way. Not only did I get a BMW for my wife, the nicest one they had, but I could sell it right now and have a $25,000 profit from the transaction. I bet you've never looked at it like, honey, I want to go to the car dealership, buy a new car, and make $25,000 profit. Well, that's just finance. Cool though, right? Okay. See, if you ever buy a Lamborghini, a Lambo, it should be free. Okay? Maybe even make you money. I don't know about that, but cool. But that's money. Do you understand? You have to understand money. Money is awesome. But if mortgages are 7% and the stock market's going to go down, oy vey. Well, XX, I was just agreeing with what you were saying, so now why are you being all pissy? Okay, someone said Kiwi yen. Okay, we can go through there. I've been alone. Why do people get so upset about the degree thing? I never understood that why. I never understood why. I'm just saying it. I had to work. It was very difficult to get that, and it shows some uniqueness. Okay. Cool. Cool. There we go. Okay, that's what that says if you're kind of following this. But yeah, that it's an interesting trade because, you know, we got the change of the YCC. So yields doubled. Yields are up 100%. They're not 100%. They're up. Okay, I guess I should say double. Okay. Okay, YCC has doubled. And my concern, first of all, this is a counter trend trade if you buy it down here. I don't like counter trend trades, but I discussed this several days ago, actually, that it probably will go up. And I've definitely seen situations which it has gone up. I just don't like that trade. So to stand about the like, what does it mean? What is what's the necessity of this change, and how does it impact investment opportunities around the world? And what I've said is, Japanese investors invest globally because they've had, oh man, my mouse is really shot here. Let me see if I can get this back. Okay. Japanese yields have been so low for so long, zero for 30 years, that Japanese investors have been forced to invest overseas, like New Zealand, for example. So Kiwi yen goes up. So as yields double, so they went from 0.25, which is crazy low, to 0.50, which is still crazy low. The thought is they could double again and go to 1. They could, right? They can go even higher and go, let's say, as high as 2.0 over the next 12 months, let's say. And as that occurs, okay, it eats into the carry of the New Zealand dollar versus the yen. So you got your carry. So the positive differential. So let's say this was paying, let's say 5%, but then you got to pay 2%, right? On the exchange rate. So now you're down to only a 3% carry. But then Japanese investors would then need to hedge their FX exposure. Okay. And what does that cost? And if it was 1.5%, let's say, so now their actual profitable carry is 1.5%. Okay. But the interesting thing is, as these things change, this could change and get closer and closer and closer to zero. The spread would get closer and closer and closer to zero. And what we need to look at as foreign exchange traders and as, international investors is at some point when this gets to zero or even like negative 0.1, it could completely change the direction, okay, of this asset class. Because there may be a significantly less need or no need to invest overseas. It's just easier and cheaper and maybe even more profitable to keep the money at home. And you can see the first move here, when yields doubled, there was an immediate impact of money coming back home to Japan. Okay. Oh, XX. Yeah, well, look, so you kind of disagreed with me earlier, and I agreed generally with what you said, but now you're being rude. So if you want to leave, feel free to leave. If I'm making you upset, you can leave. If you don't like what I'm saying, you can leave. If you don't like my attitude or my eyes or my ass, you can leave. But before you do, let me throw an ad so I can make 5 cents off you. Thank you for the nickel. Cool. All right. So what's left? We did exotics. We did some commodities. We did some dollar and some yen. What a year, though, huh? What a year. Holy smokes. Oh, yeah. Thank you for that. Yeah, thank you for that. I'm happy to do gold. Yeah, let me go back over there. Gold. All right. What's my bias? See if you can read my chart. Kevin, the only thing that matters to a foreign exchange trader in any currency that you're trading is the policy set by the central bank of that economy. So whatever event is important to the decision-making process or the policy thereof is the answer. Yeah, you guys say short. Why? Because I say short? Yeah, well, there you go. This is from the swing trading group. Okay. What variable, like what would make me have a bearish bias for gold? Why would I have this bias for short? It looks very bullish, doesn't it? It's been going up, making higher highs. Why would I say down? Okay. Strong dollar. I expect a strong dollar and a recession. Thank you. Thiago and Justin are right. The recession creates a strong dollar. Okay. So if the recession occurs, is it inflationary or disinflationary? I don't give a dang about the triple top because I expected the triple top before the triple top even happened. So Asamu, you're right, except if you, right, I'm looking for the triple top because I'm anticipating the triple top, but I'm not reacting to the triple top. I understand why it's forming, and therefore it's sort of it's a consequence of what's happening, but not why I'm doing the trade. Okay? Great. Disinflationary. So gold is supposed to hedge inflation, yet there's this expectation of disinflation. So that is not bullish for gold. It's bearish for gold. You see? So I don't know the future, but that's my thought process, everybody. You can disagree with me, and I'm totally okay with that. I don't know the future any more than you. I'm not here to tell you I'm smarter than you. I do have more experience, but that's why I'm sharing. But you can absolutely, totally disagree with me. What I'm doing is saying, well, this is how I got to the conclusion. Right or wrong, this is how I got to the conclusion. I think there's a high probability of a recession. I think there's a high probability of dollar strength. I think there's a high probability of continued disinflation. I also don't think we're going to get back to 2%, but we're dropping from 9 to 8 to 7 to 6 to 5 to 4. Okay? So we're in a disinflationary period. I'm also looking at seasonality for US dollar and the stock market, and I'm making some assumptions based on these facts and variables. I put them into my model, and I say the probability is in the near future, gold will probably come down in price. Okay. So now what? Is it a good time to sell? Well, that is now technical analysis. So again, we can agree, we can disagree. Could you sell a double top if you already thought a double top would form near this price, but more importantly, at this time? See, going back to the stock market conversation, there was an assumption I gave in January that said somewhere between the second week of December and the second week of January, the stock market's going to fall. You're like, Wayne, that's an entire month. Well, yeah, I just don't know when. Each year it's a little bit different. The farmer has a decent idea when to plant the seeds and when to harvest the crop, but they don't know what day or even what week. They have a pretty good idea. Okay? Byrne says Frank Holmes, who I don't know, believes that gold could climb as high as 4,000. Okay? That's irrelevant to me. I would want to know why. A lot would have to happen. But typically when someone says it's going to go from 1,800 to 4,000, it's a sales pitch. They might even be right, but it will take quite a bit of time. And so it's just, it's a headline. It's a marketing promo. But whatever, I'm not saying he's wrong. I'm just saying it's sort of dumb to even say it. But whatever. I don't know this guy. He's probably an expert. So I don't know him. I don't need to say anything bad about him. I'm sharing with how do we handle the situation now. So I looked at the facts. I looked at the history. I looked at the future. I came to a conclusion. That's called a bias. From there, I create a strategy. And based on all of that, there's this window, second week of December to second week of January. Somewhere in there, I think we have a high probability of a reversal. So now, in that 4-week period, I have the opportunity to trade a reversal pattern. Could I sell this double top? Oliver did. Once again, this is a tactical decision. What you decide now is your personal alpha. Now, if you had all this information, remember I set it all up. If you were a bear looking for a potential reversal in this window of time, think of like that's the money maker right there. Then from that, you drop into this chart. You can do whatever you want. That's your decision. You could trade a double top. You could trade a lower high. You could trade a lower low, lower high. Which one's right? They're all right. They're all wrong. I don't know. We don't know the future. But what you're trying to create is a pattern like that, based on not a guess or conjecture or opinion, but the analysis of macroeconomic data, microeconomic data too, interest rates, future levels of GDP growth. Okay? And from that, you look at seasonality and you say, yeah, well, in this period of time, based on my analysis of all that data, which is just a model, you are expecting something like this over the next 2 or 3 months. Sakala says, Wayne, I thought in a recession the Fed cuts rates. Yes. And that weakens the dollar. No. No. That statement is wrong. Okay? In a normal world, okay, if we'll say GDP is falling, right? We'll do it that way. If GDP is falling, boy, my mouse is really going down. Okay, then I'll put it this way. Interest rates are cut. Yes. Okay, by the Fed. So we'll label this Fed policy. Now, the next part of this question, which GDP? Now, the United States is unique because of the reserve currency status. So very often, if not always, it's global GDP. And over the last 50 to 75 years, if global GDP falls, then interest rates in the United States, but globally too, but we'll put specifically USA, are falling. So now you're like, so that will make the dollar weak, right? Wrong. Because countries around the world, global, move their money to the safety of the USA. And that makes USD stronger. Okay, Sakala? Now, when the USA is rich, what do Americans buy? Huh? What do Americans buy when they're rich? French wine, German cars, wow, my mouse is really going. What else do they buy? What kind of stuff? Okay. Yeah. Buildings. No, not necessarily assets, Kevin. Not rich Americans, when America is rich. Remember, the average person in America is not rich. Okay? What's the 99% spending their money on? Okay? China phones. You're like, Wayne, Americans don't buy cheap Chinese phones. They buy iPhones. Yeah, which are cheap Chinese phones that you pay too much for. They triple the price because you're willing to pay for it for an iPhone. Okay? What else? Something from Japan, right? Oh, wow, my mouse is it's gone. Wow. Something from Japan, something from wherever, right? So when America's rich, okay, diamonds, sure, gold, sure, okay, cool. So what? They're buying stuff. So stuff, we will put this in black, stuff is moving from France to the USA, from Germany to the USA, to China to the USA, and from Japan to the USA. What does America give up in this trade? The French give up their wine, the Germans give up their cars, the Chinese give up their phones, Japan, whatever, gives up, okay? And they give that stuff up in exchange for what? No, but not dollars. Not dollars. No, not dollars. Americans have dollars. They have to sell the dollar to buy euros. They have to sell the dollar and exchange it for Chinese yuan. They have to sell their dollars in exchange for Japanese yen. They have to sell dollars. So when America is filthy, stinking rich and they're sipping on the Chateauneuf de Pape, huh? They're Lafitte. Okay? The US dollar falls and people go on TV and write books about how the dollar's worthless. They're like, that's right. You know what's nicer? Mercedes S-Class. Nicer than a US dollar. Okay? So you got to be careful. So when America's rich, the dollar's weak. And when America's poor, the dollar's strong. And you're like, but America's rich. Now, the central bank is purposely killing the economy and is pissed off that people have not lost their jobs yet. The central bank is purposely destroying the economy. Americans don't feel rich. Again, talking to a designer, a young designer who's she was selling her clothes in this boutique shop. I'm talking to her and she says, Christmas shopping is horrible. Horrible. So the dollar should be strong. Okay? What an interesting topsy-turvy world, right? Interesting topsy-turvy world. Do I like Powell? Irrelevant. I like money. Don't care. I have to understand the policy, how it impacts the markets, and then I need to make as much money as possible. I have a retirement account because it helps me save on taxes. Okay? See, I'm a small business owner, and I can take $50,000. It's actually a little bit more than that, but $50,000 that I would normally pay in taxes every year. Okay, this is tax money. Not all of my tax money. I pay way more than that in taxes. But of that tax bill, I can take $50,000. I can give it to the government in the form of taxes, or I can put it into a retirement account. And not pay the taxes until I retire. Meanwhile, I can take the retirement account money, which used to be tax money, so now I don't pay the taxes. I put it in this retirement account, and then, because I know the markets, I can invest it. And let's say on average, you get an 8% return. Okay? Which means in year 10, okay, you start on year 0. Oh, this is really hard with this mouse. Year 0, year 10, year 20. Okay? So in year 0, it's $50,000, right? Okay, now you have to understand, yes, this year's a down year, but it'll all even off. I'm saying on average. Some years it'll be negative, some years it'll be plus 22. Whatever. 20 years is a long time. You understand? So you average it out. So at the end of 50, at the beginning of this process, it's 50K. And in 10 years, it's 100K because I'm compounding. And in 20 years, it's 200K. So by avoiding taxes, I made $200,000 this year. Now, I don't get paid until I'm 70. But when I'm 70, I get paid $200,000 for this year because I invested it wisely instead of paying taxes. Not total money made, but from my tax strategy, I will make $200,000, but then I'll have to pay taxes on the 20th year when I withdraw it. Now, that's for this year. And then there's next year, and the year after, and the year after, and the year after, and the year after. So by the time I get to 70, this will be 200,000. Next year will be 190,000. The year after will be 180, and then it'll exponentially get small because by year 19, I only just put the 50K in, and I only made 8% on 50K, so it's hardly anything. But the money that I'm doing now will be right around $200,000 each year. Now tell me, isn't it nice to understand finance? Okay. That I can buy a brand new BMW and make $25,000 profit. Or by, let's say, not tax avoidance, but tax strategy, I will make millions of dollars. assuming the stock market on average will go up 8%. And ideally 8% every year versus down 20, up 20, okay? Okay? No. This is, I don't pay $50,000 in taxes. Of the taxes, okay, because my trading business has income, okay, minus expenses that are, wow, this is really hard to write, okay, which are tax write-offs. And from that, I have a bill, okay? Now, from that bill, let's say it's $100,000. I can contribute, my company can contribute to me, because it's my corporation. My corporation can take, of the $100,000 owed in taxes, could then put $50,000 into my retirement account, my personal retirement account. So this is, the fund investing into Wayne McDonald's retirement account. So now 50,000 goes to the government and 50,000 goes to the Wayne McDonald retirement account instead of just 100,000 going to the government. You understand? But because I'm smart with the money, that should compound into millions. Just the tax strategy should leave me with millions. Okay. But if that makes me an asshole for sharing it, what an arrogant prick. Then you misunderstand my intentions. Okay. And I don't know why. Maybe it's my tone of voice. Maybe it's my usage of words. Maybe it's my confidence. Maybe it's something that happened to you earlier in life from somebody else. Maybe it's a cultural thing. But my intention isn't to brag or to be arrogant. That's far from the truth. But I know it can be interpreted that way. But I'm just trying to show you finance and money. It's just money. The point of money is to make you more money. That's what's beautiful about money. Okay? Whatever money you have a choice. Spend it or invest it. And I hope you defer your gratification as much as possible and invest the money. Okay? U.S. tax is high? No, I'm not saying it's high. Once again, irrelevant. I don't care about taxes. I love paying taxes. I live in a nice town in a beautiful neighborhood. I have very, very few worries. I am very grateful to be here. I'm happy to pay taxes. I love paying taxes. It's my contribution to society. But it's also a game, isn't it? So the government puts out programs. I didn't create the program. I'm not trying to cheat or steal the government. They have a program. They're like, you can set up a corporation, and the IRS tax codes is that your corporation can invest into your retirement account, and then you can invest that money. Well, what are they saying? Look, if you're smart enough to invest your money, we want you to invest your money into the American economy. If you're not smart enough, or you don't have enough money to hire an expert who is smart enough, so if you're an average Joe, pay the taxes, the government will invest. It might be a schoolhouse, it might be a firehouse, it might fix the pothole in the highway, or they might build a soccer stadium in Iraq. They might build a bomb and give it to Ukraine. They're making investment decisions on your behalf. Sweet. But they're like, dude, if you're smart enough to invest and you want to put it in the American stock market, then invest it into the American stock market. There's a benefit to society for that. To save your money and invest into the U.S. economy. So I'm like, well, I'm going to do that. I'm going to invest into the U.S. economy by, directing some of my tax dollars. Great. And that's great for me. Now, in 20 years, when my 50K is 200K, I will then have to pay taxes. I'm going to pay taxes, and I'm probably going to pay more taxes. The thing is, by the time it's over, I got my $200,000, and then I got to pay taxes. I'll be left with $120,000. But that's $120,000 that didn't exist before. And look, America gets its tax. It gets taxed. It gets its taxes. I invested in the economy and it will collect taxes. Sweet. It's just how it works. Well, Rich Neil, I'm not a tax expert. You would have to talk to your tax attorney, your accountant. Okay. Okay. But I would assume your investment or trading activity into crypto gives you tax liability. Even if the tax laws are not there, you're investing or buying or selling assets. And therefore, you're likely to be taxed. Now you're like, well, if you're not taxed now, you could be retroactively taxed, or you'll be taxed in the near future, or you could even be penalized for not declaring these things. But there's no way you can trade and invest with and completely avoid taxes. I'm not talking about avoiding taxes. My tax strategy allows me to make money and then pay even more taxes than I would have initially. Because now the government is collecting tax on $200,000 instead of the $50,000. They actually win. But they're like, dude, you're smart, so we got a program for you. And the rich get rich. So I highly recommend A, understanding money, and B, getting rich. So peace on earth. May the pips be with you. May your profits be above average. I'm not sure when I'm going to see you again. Probably Wednesday, maybe Thursday. Okay? So I don't know what God you pray to, if any. I don't know if you put up a Christmas tree or a manger, or there's a star, or there's candles. I don't know the year-end ritual that you do. But this is an opportunity for all of us to just have some, I suppose, gratitude that we got through this year. Another year of COVID, another year of trading and investing. We did this together as a community. So I am very grateful. Remember, I think you cannot be happy. I think it's impossible to be happy without gratitude. So I'm grateful for you in my life. You bring me happiness and joy. And I will see you next week to kind of take a look at things. We might get one more decent, maybe 2 or 3 more decent trading days before the new year, and then we got to go on break again. So be careful out there. I hope you have a huge smile on your face. Remember to thank the loved ones in your life for supporting you through this thing called Forex. They're making sacrifices too. You can't do this alone. So make sure you share the gratitude. Make sure it's manifested and people know. Say, hey, thank you. I know I'm spending a lot of time doing Forex, but this is important to me. And I thank you for your understanding and your support. Share that gratitude and happiness. And I say it every day, and I mean it, but peace on earth. This isn't a Christmas thing. If we have peace on earth, it's going to be because we can trade with each other. We can trade goods and services, but we can trade ideas. We can share knowledge in history and stories and food and music. It's important for all of humanity. And you'll get that through capitalism. We want to share our ideas. I want to celebrate your cultural history. I want to know about the food, the stories, the music. And hey, let's trade. It's good. We have products and services here. You have products, services in there. Let's work together. Let's celebrate each other. Let's make money together. Let's raise the standard of living together. And when that happens, we probably won't kill each other. There will be no need for war. We'll just trade. We'll have a wonderful standard of living and a year-long celebration. So I say it every day and I mean it every day. Peace on earth. May the pips be with you and may your profits be above average. See you next week.